reminder, good afternoon. You're watching Market Fatafat on ET now with me, Vinny Motiwala, along with me, Cheryl D'Souza as well. Cheryl, a very good afternoon to you as well. And markets, yes, they did manage to, recover from the day's lowest point, 21,900, around those levels. It's what it is at.
Absolutely, Vinny. Good afternoon to you. And if you look at the markets, a steady set of recovery coming in for the benchmark indices. If you can see it on your screen, we are way above the 21,900 mark. When it comes to the Nifty, you have the Sensex also moving in tandem with the Nifty as of now. Whereas Nifty Bank, that is actually underperforming the benchmark indices because Nifty Bank is actually hovering in the negative territory as we speak, with the advanced decline ratio still tilted in the favor of gain. As one of the stellar outperformers, or you could term it as the stock of the day, it has to be Paytm, because that one has recovered approximately 18% from the day's lowest point. Remember, for the last three trading session, it was locked in the lower circuit. Today, the circuit has opened up and it is actually trading higher by about 5%. Apart from that, you have the OMC counters that are buzzing in trade, with BPCL being the top gainer on the Nifty, while on the flip side is Power Grid, that is the top loser when it comes to the Nifty. So that's the way how the markets are looking like for now. Nifty has surpassed the 21,900, with the banks taking it a bit easy.
Okay. That's the roundup of the markets. But on that note, let's get started with all the stocks that are buzzing in trade on the back of news flows or on the back of technicals as well. And from the research team right now, we do have Shesha as well as Ankita joining in with us. A very good afternoon to both of y'all as well. Let me start with the first stock that is in focus today, and we'll talk about Wipro. Actually, the whole IT pack, whether you look at a TCS, HCL Tech, all of them also are buzzing in trade as well. They were at one point of time trading with around at their 52-week high levels as well. And Wipro too buzzing away in trade, specifically after we saw a note that came in from a Macquarie sales note. This has actually come in. What they're saying, Macquarie sales note is highlighting that they think that Wipro is a better candidate for turnaround. They expect that the exit from the unprofitable business is something that will be aiding the margins of the company in FY25, and Wipro can be a dark horse and an alpha idea, is what Macquarie sales note highlights. Furthermore, they are expecting a bounce back in the Capco growth as well. And other than that, HCL Tech remains among their top picks and must own a stock in the sector. They like Persistent Systems in the mid-cap IT name, as well as Wipro can narrow the growth gap versus its peers. So currently, when you look at it, the value of Wipro is at 20 times June 25 PE, and they have raised the target by 14% to 570. This is according to the Macquarie sales note. So on the back of that, we're seeing that the stock is buzzing away in trade, up more than 3%.
All right, moving on, let's talk about Petronet LNG, and that particular counter is soaring in trade today. Remember that you have the India Energy Week that's underway in Goa, but you have a lot of news flow coming in from that particular domain. As such, you have officials or other sources telling that Petronet LNG will be renewing a long-term contract to buy liquefied natural gas, that is also known as LNG, from Qatar, and this will be finalized as early as today. And they are going to extend the supplies beyond 2028. The deal with Qatar will be renewed under the new terms, is what officials have to say. Remember that all the officials are gathered on the sidelines of India Energy Week that is happening in Goa. The renewal will be for the supplies of 7.5 million tons a year LNG beyond 2028. Remember, the Petronet's current deal with Qatar has a slope of around 12.67% over Brent, with 52 cents as fixed charges, and the company is responsible for shipping of the product. Remember, the revised deal will be on DES basis, with Qatar bearing the LNG shipping costs, and some of the sources have also said that this deal could be renewed for 20 years. So on back of this particular development, 6% uptick coming in for Petronet LNG.
Okay, let's move on to stock number 3 for today, and Shesha, Suven Pharma. This one will focus on the back of its numbers.
Well, yes, very weak set of results, and the stock is reacting negatively. In fact, it is sitting with a cut of over 6.5% as we speak. Revenues have declined by about 38% on a year-on-year basis. Management, however, says that revenue growth excluding specialty chemical and COVID molecules stood at about 2% on a year-on-year basis. Remember, specialty chemical segment has been impacted because of inventory destocking, and hence revenues have dipped by as much as 39% on a year-on-year basis. As far as other parameters are concerned, numbers look very weak. EBITDA margins came in at just 29.6% versus 41.5% that the company had reported same time last year. Profit has also tanked nearly 56% on a year-on-year basis. All in all, very weak set of numbers. The stock has recovered slightly from the lowest point of the day, but despite that, 6.5% lower in trade.
All right, so that is Suven Pharma for you, and as mentioned earlier, Paytm definitely that's the stock of the day, given the fact that we've seen a sharp recovery. And what's the current news flow that we are picking up on this regard, Ankita?
That's correct. I mean, see a bit of a bottom fishing happening there because Paytm was locked in the lower circuit for the last consecutive 3 trading sessions, and now it has suddenly picked up. A Bernstein note might have something to do with it because it is maintaining an outperform with a target price of 600 rupees. They feel that after more than 40% decline in the last few days, the stock has once again it's coming back to near doomsday valuation. They are now leaning towards the buy now camp is what Bernstein says. A healthy upside in their very consecutive base case scenario, and they feel that the regulatory actions will no doubt have a lasting impact on investors' assessments of the business model risk, of the management's ability to handle regulatory risk. But they expect the company to successfully execute the operational changes required to overcome the restrictions. And on the back of that, Bernstein is maintaining an outperform, and on the back of that, we are seeing Paytm up 5% in trade today.
Okay, let's move on. Talk about IEX. This one is in focus as well, buzzing away in trade because we have an update that came in yesterday from IEX, and that was that they have achieved 10,893 MU of total volume in terms of the month of January 2024, which is the highest that they have seen in terms of highest ever volumes for the company as well. So yes, that's the reason in terms of million units when you're comparing 26% growth on a year-on-year basis. So surely a one to watch out for on the back of that. Other than that, out of this 9,137 million units are from the conventional power market, and other than that 236 million units from the green market segment for the company, and 1,520 million units from the renewable energy certificate side as well. So yes, on the back of this, we're seeing today that IEX is buzzing in trade. It's the highest ever volumes that they have recorded, so that is why we're keeping an eye out on this one.
All right, so that is IEX for you. That is in focus today. But Ashesha, let's move on and let's talk about the next stock that you have on your radar, and that is VSC.
Well, yes, the stock is declining over 3.5% today. One, it reported its numbers. Revenues grew by about 82% on a year-on-year basis. Margins have also expanded to about 24.7% versus 19.1% that the company had reported same time last year. So as far as numbers are concerned, numbers look good on a year-on-year basis. But we have a downgrade that has come in from Investec this morning, where they've downgraded the stock to hold rating from their earlier buy rating. They say it was a beat as far as revenue and core margins are concerned. The company also continues to gain market share, but they are downgrading the stock due to limited upside potential and increased risks from margin uncertainty. So on the back of this downgrade report that has come in from Investec, the stock is declining nearly 3.5% lower in trade as we speak.
Let's move on, talk about another earnings candidate, and Ankita, Bharti Airtel too reported its numbers. How are they looking like?
Well, yes, Bharti Airtel has reported its numbers, and there is a slight bit of a miss coming in there according to our ET Now estimates. Now, let's look at the numbers first. On a consolidated sequential basis, the revenue is up 2.3%, the EBITDA is up 1.5%, the margins have come in at 52.3% versus 52.7%, and the net profit is up 82%. Now, slight bit of a miss is owing to the weak Africa numbers. The Indian mobile business reported strong set of numbers. The first quarter-on-quarter decline in margins, in the last 6 quarters was led by the Africa business. Africa business, weak numbers are owing to the currency devaluation, and the Indian mobile growth was basically owing to the growth in the subscriber base and a higher ARPU, and the ARPU grew for third consecutive quarter without any tariff hike owing to the rising 4G subscribers and high postpaid penetration. So on the back of that, the ARPU grew to 208, which is above the medium-term target. On the back of that, Macquarie also came out with a note on Airtel. They are maintaining an outperform with a target price of 990 rupees per share. They see a steady execution in the India mobile business, enterprise, and the Africa business, as I mentioned, was a bit of a drag. But they feel that quarter 3 results again underscore Bharti's focus on the premiumization strategy. On the back of that, they're maintaining an outperform. So Bharti Airtel is going to be in focus today.
All right, so that is Bharti Airtel, why that one is in focus today. But let's talk about a new IPO that is likely to open very soon. We have Mr. Prabhat Agarwal, who's the promoter and managing director at Entero Healthcare Solutions, joining us on the show. Very good afternoon to you, sir. Thank you so much for joining us on ET Now. And firstly, congratulations on the IPO. If you could tell us a bit about the company and actually the business models, who are the clients that you all cater to?
So we are one of the largest healthcare product distributor in this country. We work with 1900 plus companies for which we are distributors in this area. We work with around 81,000 plus pharmacies, 3,500 hospitals that we supply products to on a regular basis. And these customers are spread over 500 districts of India, and we service them through 77 warehouses that we have in the country in 38 cities. So we are one of the largest healthcare product distributor in this country.
Good afternoon, Mr. Agarwal. This is Vinny joining in the conversation as well. If you could also tell us, you're looking to raise around 1,600 crores, out of which 1,000 crores is fresh issue and 600 crores is an OFS. What are the key objectives of the IPO and how will you be utilizing these funds?
Yeah, so in the company we are raising 1,000 crores. A large portion of that will be used for driving growth through working capital. So we are focusing on increasing our geographic penetration, customer count, wallet share in the customers, and for that we would be using working capital. We would be requiring working capital. Part of the IPO proceeds will be used to retire debt, around 142 crores, and the rest of it will be used in pursuing inorganic opportunities as well as general corporate purposes.
Right. The DRHP actually mentions using the IPO proceeds for further acquisitions. What is your acquisition strategy right now, and what sort of a strategy are you eyeing for going ahead?
Yeah, so in last 5 years we have acquired 34 distributors, local distributors in different parts of the country. We will continue to identify such opportunities in those markets which is under-penetrated or where we are not there. We want to expand our network, our presence, customer reach, geographic reach throughout this country. And to fulfill that purpose, we are continuously evaluating multiple opportunities to acquire, small local distributors.
And also in terms of the shareholding pattern, what will that be looking like post the listing?
Yeah, so there are two co-founders of the company, including myself and Prem Sethi, and we have a corporate promoter, Orbimed, which is which came in very early in the company, and together three of us hold more than 50% shares.
Right. If you look at your losses, it's actually narrowed on a year-on-year basis, but the company is still not clocking a profit when you talk about this really on a yearly basis. How do you actually plan on reversing this particular trend, and what's your path to profitability?
So on an operating profit basis, we had been profitable from year 2 only, right? So last 3 years we had made operating profit, and in this first 6 months of the year we have turned PAT positive also. So even after deducting tax and other interest costs and all that, we generated 11.5 crores of PAT in first 6 months of this year. On EBITDA basis, our growth has been significant. In fact, in first 6 months of the year, we made the same amount of EBITDA that we made in entire year last year. So, both on operating profit has been expanding and margins have been expanding in last couple of years. And even on a profit after tax basis, we have turned profitable in first 6 months of the year.
And overall, when you're looking at the Indian pharma space, that has been heated up with competition, especially from players like MedPlus, Tata 1mg, Apollo Pharmacies, and many more players are there. So what is your growth strategy amid all this competition, and how do you plan on outperforming your peers?
So India, if you look at, at a pharmacy level, is still a very fragmented market. The chains have a very small percentage of the total, business in India, and we supply to all standalone mom and pop pharmacies and hospitals in this country, right? Last 3 years we have grown at a 36% CAGR, which is like more than 3 times of the industry growth rate. And with the new capital coming into the company where, we'll have access to more resources, we would drive this growth even more. We'll be more aggressive in driving growth in future higher than what we had been, delivering for last 3 years.
All right. Thank you, Mr. Agarwal, for joining us on the show, actually talking about the IPO that is all set to open. All the best for the IPO as well as following the listing on the bourses. So that was the management of Entero Health Solution talking about the company as well as its financials. But on that note, we slip into a break on this edition of Market Fatafat. When we come back, we will be connecting with another management and taking you through all the stocks buzzing in trade.
Welcome back, and you're watching Market Fatafat on ET now, and we do have the management of One Infra Constructions joining in with us, Mr. Mananpreet Shah, MD at the company. Thank you so much, Mr. Shah, for joining in with us this afternoon on ET now. When I'm looking at your numbers as of now, in these 9 months so far, you've managed to see a revenue of around 800 crores. So for the exit rate for this year, what is the exit rate expected in terms of revenue? And also in terms of your latest project that is there, obviously the biggest one, that is the Aradhya one, which is there in Mumbai. In terms of the revenue potential that is overall there from this project versus other projects, also what is the revenue?
So the projections that you're seeing basically is on the collection side of it mainly. We're seeing stability of over 1,000 crores closure over this year. And there are 2-3 things. A lot of the revenue does not come into our books because we are on a DM partnership basis model. So the profitability will always see much more higher because the revenue does not clock in. And regarding the project, which is Aradhya Avan, which you mentioned, again, that would be the same scenario where we are DM model partners. So the revenue will not come in our books, but we are seeing a potential of approximately of over 3,000 crores coming in from that side, and a percentage of the top line would come into our books as our revenue.
Right. Good afternoon, Mr. Shah. This is Shell also joining in the conversation. If you look at the PAT rate, his PAT is coming at around 87 odd crore rupees in the quarter gone by, and if you actually try to extrapolate that, it looks like you will end the year at current rate at around 300 odd crore rupees or so when you talk of the full year PAT for your company. Can we assume that given the fact that the momentum is pretty strong going ahead, will we expect a PAT of around 400 to 450 crore rupees for FY25 for the full year?
Well, definitely the target is absolutely that because there are a couple of launches which we planned in the next financial year. We've even acquired a lot more projects which are on the final due diligence and the negotiation stages. So there are multiple launches which is planned in the next coming year, and the potential of the project has also been much more larger. So yes, definitely the target would be about 400 crores in the next financial year.
Okay, 400, 450 is for next year, Mr. Shah. But, for the next 3 years, if you had to talk about the profitability, do you see it doubling in the next 3 years? Where do we see it headed?
So we've secured projects of around 5.7 million square feet, which is of the RERA carpet area. And since we're into 2 businesses, we've got an EPC margin also coming in from these projects, where the EPC potential is about 10 million square feet of secured portfolio as of now. And further to these discussions is, I think we see another around 3.5 to 4 million square feet of addition happening in the forthcoming year, which the projects are in the negotiation stage. So if we just talk about the current books, we have secured projects for the next 4 to 5 financial years, which is more than 12,000 crores of a total pipeline. And with an annual run rate, we cannot staggerize it on an equal basis because the tenure and the projects are different, and on different tranches the projects are going to be launched. But we can see an upward cycle of around 1,500 to 2,000 crores on an annual basis where the launches would be planned and the sales target would be to achieve these kind of numbers.
Right. Mr. Shah, I just wanted one bit of a clarification what we spoke about in terms of the revenue potential. So in terms of the Aradhya project, you said around 3,000 crores is something that is a potential that is there. By when is this 3,000 from the Aradhya project? And overall from the other projects that you have, what is the revenue potential on these other projects as well?
So there are all the projects are Aradhya basically. So the Aradhya project is Aradhya 1, which is the DM model. That's where the projection is around 3,000 crores. The Aradhya 1 Park project that you are speaking about, where we've sold 333 crore worth of inventory already, the potential over there is 1,200 crores on a conservative basis. This potential we are anticipating to start recognizing it by almost at the end of next year, because the project construction is just started and we won't be able to recognize this profitability on the current moment. But over and above this, the other projects also, we've got another project coming up at Ville Parle, which would be launched in the next financial year. There we are seeing also a stable volume at the moment, and that's where that would be launched in the next financial year. Hopefully in the first quarter. We are almost on the final leg of achieving the permissions as well. So that's another one. We've got a couple of more projects, which is at Dahisar, which is at Juhu, which we're completing. And a lot of collection is actually due from our projects because we've just received OC for one of our other Ghatkopar project. So we see a strong cash flow coming in because 90% plus of inventory is already sold over there. And we would also be completing our Juhu project, which is Aradhya Evoke, in the month of June. That's also 90% plus inventory sold out. So a lot of collection we would see coming in from there as well. So all of this cash flow is going to be utilized for the further projects which we've already secured. And like the other projects which I mentioned, from Tardev to Villeparle, the new addition which is also there right now is the Pali Hill project, which is again planned by the end of this year, by December.
Then we leave it there, Mr. Shah. Sounding pretty optimistic, not only just for the year, for this year, but the years to come for One Infra, given the fact that they're expecting to hit a profit of around 400 to 450 crore rupees in FY25. So that was the management of One Infra. Thank you so much, Mr. Shah, for joining us on this leg of Market Fatafat. So that's One Infra management, sounding pretty optimistic about the years going ahead, and this all aided by strong launches and also strong cash flow going ahead. But on that note, we slip into a break on this edition of Market Fatafat. Stay tuned. More on the other side. Don't go anywhere.